Hey traders, welcome back to the weekly Forex Forecast. Coming up next week on Tuesday, we have USCPI, and USCPI is going to restrict not just the dollar pairs and the dollar heading into Tuesday, but also Forex pairs in general are likely to do nothing and wait for this report to come out. So going into next week, I'm going to be showing you in the dollar pairs the setups that I'm going to be looking at trading post CPI. And we have started to make a higher low at the 10150 to the 102 area, which I highlighted ever since we started selling off as an area to look for a potential reversal. And this reversal seems to be now picking up steam. So going into next week, I can either be long the dollar or do nothing. And alongside US dollar long plays, we're going to be looking at other themes post CPI next week. I'm going to be showing you that are on my watch list setups that I'm going to be looking at trading next week, such as the New Zealand dollar long setup. Now, I do think New Zealand dollar longs heading into next week are really something we should be paying attention to, and I'm going to explain why in today's video. Okay, so if we have a look at the scores for the coming week, the main standout currencies and themes for next week are to the short side. The Japanese yen to the short side, although this is strengthening somewhat in the performance metrics here. The Aussie to the short side, Euro to the short side, and we're also going to look at Swiss franc to the short side as well. Now to the long side, we're going to be pairing those with the dollar, and we've discussed how post CPI going to be looking at dollar long plays. We're also going to be looking at CAD long plays. So CAD yen to the upside, Aussie CAD to the downside, EurCad to the downside are markets we're going to be looking at. And outside of that, we're also going to be looking at the theme of New Zealand dollar longs. Now, why? Well, first and foremost, it is sitting, and the New Zealand dollar is what I mean by it. The New Zealand dollar is sitting at the number 2 spot here in the performance metrics. So I want to be naturally pairing that versus the weaker currencies anyway. Yes, it is neutral in the performance metrics. However, Forex is a relative game. So even with a neutral New Zealand, I still want to be looking at pairing that versus Aussie. So Aussie New Zealand to the downside, Euro New Zealand to the downside, New Zealand yen to the upside, etc. So we will be looking at those markets. But the other thing I really like about the New Zealand dollar long theme is that there is a fundamental bias to this now heading into next week, because yesterday we had ANZ Bank coming out and they stated that they are now forecasting 2 more rate hikes from the Reserve Bank of New Zealand, and they're looking for a 25 basis point hike in February and a 25 basis point hike in April. Now, why is this important? Well, it's not just important for the New Zealand dollar, because obviously if they're going to start hiking rates again after pausing the RBNZ, then this is bullish for the New Zealand dollar. And it's why we saw that late day reversal at the end of last week. And we saw that strengthening coming into the New Zealand dollar. It was because of this. But it's also significant, or it has wider significance to the other central banks. Why? Because the New Zealand central bank, the RBNZ, they tend to move first, almost like a leading indicator for other central banks. And if the RBNZ are going to not start to cut rates after they previously paused, but they're going to instead start to hike rates, this is suggestive of other central banks actually following suit. And it suggests that rather than, getting a cutting cycle starting, we may actually see, due to inflationary pressures which have been building, we may actually see other central banks following and surprising with rate hikes next instead of rate cuts. So this is all indicative of markets kind of shifting into a more, although we have risk on, especially in equities, we're shifting into a kind of inflationary risk on, that kind of 2021 risk on, where we saw stocks rallying, we saw the dollar also rallying, and we had the central banks hiking. So I don't think this is sustainable for stocks. I do think equities are likely to peak in Q1, even though some of them are going ballistic with that kind of concentration we're seeing in Nvidia and everything else. But I do think it is the equity markets which will break and they will start to peak as the dollar continues higher. So going into next week, we have a very good fundamental basis for the New Zealand long theme, as well as the fact this is sitting number 2. So I'm going to be looking in today's video at CAD yen to the upside, Aussie CAD to the downside, EurCad to the downside, followed by those New Zealand dollar long plays versus the Euro, the Aussie and the yen. And then we're also going to be looking at those dollar pairs post CPI. And again, I can only be long the dollar next week or do nothing. Selling this is not an option. And therefore, we're going to be pairing that with Euro dollar to the downside I'm going to be looking at, Aussie dollar to the downside, and also US dollar yen to the upside next week. And we'll also look at a couple of Swiss franc shorts that we can look at when we jump over to the watch list and look at the setups that I'm going to be personally looking at trading next week. Okay, so let's have a look at the setups that I'm personally looking at trading heading into next week. Starting with crude oil, you can see crude oil is actually in somewhat of a range. And this is not a particularly bullish market, but it's not very bearish either. The last time we did have some momentum, it was to the downside, and now we're kind of chopping about. So on balance, I do favor oil shorts, given the opportunity from the top end of this kind of sideways consolidation. Especially if we come up and take out these highs, this would be good kind of intra-week resistance here. We can trade from above the 79.56. And so what I'm going to be looking at, and bear in mind, I get asked quite often, what are these levels? These levels are algorithmic in the Hedge Dash app, and they're showing you the market pricing probabilities for this week that crude oil has a 70% chance essentially of staying within this range by the time the week finishes. Now, when we have those algorithmic probabilities, and these are based on market pricing probabilities, what this means is it sets up high probability opportunities for us. So if I'm looking to be short crude oil, what I want to see is if we can break above the 79.56 heading into next week. Once we start to break this, anywhere in this area, I'm going to be looking for a potential short opportunity for 1 or 2 days, because we should be contained within these ranges heading into next week. Usually only if we have catalysts, or if you're trading a very strong market, you can break out to the upside, or a very weak market, you can break down to the below side. But generally speaking, markets will, with a 70% expectancy, trade between these levels. So if we breach all to the upside, I will be looking at a near-term short. If you want to trade this intra-week, so if we start to push up towards the upper bound, but instead of testing it, we start to break out with momentum intra-week, very often you get usually just one opportunity, sometimes two, but one opportunity for a pullback and a sell-off into the lower bound at the 73.53. Now, of course, these probabilities work both ways. If we sell off and you go short and you break down below the 73.53, this is a good profit-taking area below here for the week, because below here, the odds of continuation start to reduce. So the first Forex pair we're going to look at is CAD yen. Now, this is my favorite market heading into next week. We do have the Canadian dollar at the top end of the performance metrics and the Japanese yen at the bottom. And you can see we've been pushing up, we consolidated, and now we have this momentum breakout above the previous high. So coming into this week, what I'd like to see is I would like to see a pullback, and preferably the setup I would like to see is if we can get the Canadian dollar versus the yen pulling all the way back and testing the lower bound at the 109.73. If we breach this, especially if we breach this and test this low, this would be an opportunity I'd be looking for a near-term buy for 1 or 2 days in CAD yen. Alternatively, because this is so strong, it may be the case that we start to flag, we start to correct, and instead of pulling all the way back to the lower bound, you get, and this is where you can be reactive, you don't have to be predictive, you can be reactive, you get a momentum breakout like this, momentum precedes price, and then any pullback, usually as I say, you get 1, maybe 2, but very often just 1. That would be the opportunity to look for a follow through into the 112.08. Next is Aussie CAD. Now I can either be short this market or do nothing. I cannot buy this market next week. And you can see, unlike the CAD versus the yen, we had that kind of momentum, and it looks like we've got that kind of bull flag set up. Here we are lacking a bit of momentum. We're testing the lows and we're bouncing up, testing the lows and bouncing up. What I would really like to see then is, because I can either be short or do nothing, I would like to see this market pull back and become overbought on the week essentially. And if we breach the 0.8856, especially if we test these highs, this is going to be an area to look for a near-term short. I'm going to be looking at shorting this next week above this area for 1 or 2 days down. And if instead, as always, we don't pull back to this upper bound, but instead we just correct, and then before we test it, we break out like this, that sets up a potential follow-through trade down to the 0.8707. Next is EurCad. Now I can either be short this or do nothing. Very much like we just looked at in Aussie CAD, it is kind of failing at the lows. So we may see this snap back with some strength. If we do get that strength, what I'm going to be looking for is I'm going to be looking to fade that if we start to breach the 1.4620. Above this area, I would be looking for a near-term short for 1 or 2 days down. And if instead we start to push up towards it, but we fail to test it and we sell off like this with momentum, that sets up the potential follow-through trade to the downside, the 1.44157. And the final CAD pair is CAD franc. Now, similar to CAD yen, we do actually have this momentum. We have this drive higher. So what I'll be looking for is I will be looking for a pullback, preferably if we can pull back and become oversold on the week, because I can either buy this or do nothing. I can't short it. So if we become oversold and we test the 0.644, we breach this level, I'm going to be looking at a near-term buying opportunity in CAD franc. And if we start to break out before we test that, those of you who like intra-week breakouts, you can look for that pullback and a follow through into the 0.65536. Now, the other thing to remember is all of the watch list pairs that I'm looking at, I am planning to trade if I get the opportunity. I am not looking to trade and make money from every single setup. I have a number of markets that I'm looking at on my watch list, and then I'm reactive during the week to see which ones are setting up and giving me the opportunities to buy or sell in the direction of this plan. So don't feel like you have to trade every single market every week. Moving on to the New Zealand pairs before we finish up with the US dollar pairs. We do have a big momentum breakout in the New Zealand dollar. I did highlight one of the drivers behind this, ANZ economists coming out saying the Reserve Bank of New Zealand are going to have to hike rates twice again. So I am looking for further advances, any pullback in this market, especially if we can retest the 90.98 and come back, breach the 90.81. This is going to be a great place to start to look for buying opportunities if we become oversold on the week. And I'm going to be looking for 1 or 2 days up. And if instead, perhaps we just bounce at the 90.98 and we don't test the lower bound, if we start to break out, that is going to be the opportunity for a follow-through trade into the 92.78. Next is Aussie New Zealand. Now, this is a market that has been not in the videos recently because both Aussie and New Zealand have been weak. In fact, they've both been good short opportunities in previous videos. However, the ANZ release has actually caused a discrepancy now between these currencies. We're seeing a strengthening of the New Zealand as the Aussie remains weak. And as a result, we're seeing this momentum coming in, and this is setting up this kind of bear flag setup. So going into next week, I can be short or do nothing. I cannot buy this market. If we breach the 1.0676, I'll be looking for a retest of these lows over here, broken support, turning resistance above the 1.067. So essentially, we're testing resistance and we're also overbought on the week. That is going to be a place I'm going to be looking for a potential reversal for 1 or 2 days down. And if instead of testing the upper bound, we break out before that, you can look for that potential follow-through trade down to the 1.05380. Next is Euro New Zealand. Now, I can either be short this or do nothing next week. We actually have a trend reversal because we sold off, we started or attempted to rally, and then we failed, and now we've broken the low. So we do actually have a series of lower highs and lower lows, which is the definition of a downtrend. This is actually how you can identify technically a reversal. So going into next week, what I would like to see is, I would like to see this pull back and test this high over here. This would be great because if we start to break this high and we start to trade above the 1.7693, what are we actually saying? We're making the statement that anybody trying to buy the breakout of this high is probably making a mistake. Probably, in all probability, are making a mistake. And so if somebody's buying the breakout here, we essentially would be looking to do the opposite, to sell it. And so once it breaches this, anywhere in this area, I'll be looking for a near-term short opportunity for 1 or 2 days down. If instead we fail to make it all the way back and we just correct and then we break out with momentum, can look for that follow-through trade down to the lower bound of the 1.7372. And the final New Zealand pair we're going to look at is New Zealand franc. You can see this was a very choppy market, and then we got this big breakout, and now we're picking up with momentum. We've already had one pullback, we got the second rally, and we had this rally, of course, on the ANZ Bank statement, which was released yesterday. So going into next week, I would like to see this pullback again. I would like to see a deeper pullback and a test of the 0.5327. The deeper the better, really, especially if we come back and test this low. That would be a great opportunity to step in and buy at support, something which is essentially oversold, but I'm looking to be a buyer of. So that would be the opportunity for 1 or 2 days up I'll be looking at next week. If alternatively we just flag and instead we break out like this with momentum, that shows strength. The fact that it's not pulling all the way back here, but it's reversing before that shows strength, and you can look for that follow through trade into 0.6532. Okay, so wrapping up the Forex complex then with the dollar pairs before we move on to gold and silver. Now, going into next week with the CPI print on Tuesday, I only want to be trading these after CPI. And you can see I have a second level on here of the 146.00. That's because I want to show you a couple of different setups depending on what happens in the actual event itself. So whatever happens, I can only be a buyer of US dollars next week. I can only buy US dollar yen. I can't short it. I cannot sell dollars, okay? Because that is my set bias for the US dollar heading into next week. So what I want to see is one of two things really. Either we get a kind of neutral, like a non-event, it comes out as expected, or a bullish catalyst in the dollar. What that's going to do is it's going to allow those initial setups that we'll be looking at. So any bullish catalyst, if we end up breaking the low and then from the 147.64 we get a bullish catalyst, we start to reverse, that is going to be the opportunity below the 147.64 next week. I'm going to be looking for 1 or 2 days up, so a buying opportunity for 1 or 2 days in US dollar yen. And if instead we fail to test the low, maybe we just get a bullish catalyst and it breaks out like this, you can look for that follow through trade into the 150.92. Now, the other setup I'll be looking at is if we get a bearish catalyst, if CPI comes out much softer than expected and we get a sell-off in the dollar. Now, I might want to avoid buying that from the 147 because we've got a bearish catalyst. You can see momentum coming into the downside in the dollar. So in that scenario, the bearish catalyst, what you can look for is if we push through and we test, because very often with news events, you can break above or below the first lower bounds or the first upper bound. But if we get a big sell-off with momentum and we test this low, the 146.00 is the second place on a bearish catalyst. I would look for a potential buying opportunity for a day or two next week. Next is Aussie dollar. Now the same plan and setups apply here. What I'm going to be looking for is I'm looking for a continuation down. I can either short this or do nothing because I can only buy dollars. I'm talking about US dollars. I can't sell US dollars next week. And alternatively, I cannot buy Aussie dollars either. I can only sell Aussie dollars next week. So I can either be short this pair or do nothing. Buying this pair next week is not an option for me. So what I'll be looking for is consolidation. And again, if we get a kind of as expected or a bullish catalyst for the dollar, CPI comes out slightly hotter, then I'd be looking for those initial opportunities, a breakout above the 0.6601, testing these highs. And then perhaps we start to break out and then we get a slightly hotter CPI print and it starts to do this. That would be the opportunity to look for a short for 1 or 2 days down. Alternatively, if we get a bullish catalyst for the dollar or just a kind of nothing event and then we just start to break down anyway, that would be the opportunity, this kind of bear flag consolidation for a potential follow through trade down to the 0.64469. Now, of course, the other scenario is we get a much weaker dollar because of a softer CPI print, and Aussie US dollar blasts through its first upper bound and into its second one at the 0.6678. This would be the second place then. I would be looking for a potential short for 1 or 2 days in Aussie dollar next week. And the final Forex pair with the US dollar involved in it before we head over to gold and silver is Euro dollar. Now, I like exactly the same plays next week, so I'm only looking to be short or do nothing. I cannot buy this. And if we get a kind of bullish catalyst from the US dollar, so don't forget, if the US dollar is pushing higher, then Euro dollar above the 1.08729, this is where I'd be looking for a short, or to be short euros versus the US dollar for 1 or 2 days. Usually I'm trying to capture 1 or 2 days worth of volatility within a week. You've got 5 trading days, and I'm usually trying to capture 1 or 2 of those in each asset. Not every asset, but each asset traded. And of course, if we get a kind of non-event or we get a bullish catalyst for the dollar, that is something which can break euro dollar down before we test the upper bound. Very often you get a pullback after these events and then a follow through trade down to the 1.0699. And the alternative setup here is, of course, we get a very weak dollar. We get a bearish response from the CPI report out of the dollar. We break the upper bound. I would be looking for a potential short for 1 or 2 days at the 1.0959 or above this level. Okay, so wrapping up the video with gold and silver, and I prefer silver shorts next week over gold shorts. And given the opportunity, I would rather short silver than gold. However, because of my bullish bias in the dollar, I only really want to be shorting either gold or silver next week. If I can leave gold altogether, because gold is actually slightly outperforming some of the other commodities, it is showing some strength in the performance metrics in the HedgeDash app. So I would, on balance, rather leave this, but it can still go on the watch list, and we cover gold every week. So very simply put, any pullback in this market, if we start to breach the 2051.10, and we may even push a bit higher into this area, this is going to be an opportunity to look for shorts in gold. And again, after Tuesday, now, gold doesn't tend to be as affected by the US news events as much as the Forex pairs do. Silver is a bit more volatile. But certainly gold to the downside, silver to the downside is my preference next week. So if we pull back and we breach the 2051.10, this is going to be an area I'm going to start to look for a potential reversal. And of course, this is going to be based on US dollar strength. And again, if we get kind of a non-event on CPI and we just start to see gold breaking down intra-week, you can look for those follow-through trades down to the 1998.15. The other place I'd be looking to potentially short gold. So place number 1 above the upper bound, place number 2 if we start to break out of a kind of counter trend move intra-week. Place number 3 would be if we get a steep rally in gold, perhaps because we get a bearish catalyst and a sell-off in the dollar. If we test the 2077, especially if we breach it and we test this high over here, this would be a good place to look for 1 or 2 days down in gold next week. This would be the third place I'll be looking for a potential short opportunity in gold next week. And wrapping up the video with silver, we started to pull back, and what I'd like to see is any continued pullback in this market. I am going to be looking for a breach of the 23.19 and a test of these highs. This would be an area I'd be looking for a potential short opportunity for 1 or 2 days in silver. The second place would be that you can look for is if we get a breakout, maybe we get the CPI report, we get a stronger dollar and we start to break out intra-week. That would be an opportunity on a pullback to look for a sell-off into the 22.02 and probably down to this low. And the third place here would be if we do get a weak dollar off of CPI and we run up and we test the 23.78. And if we push through that and maybe test this high, this would be a great area to start to look for a potential short for 1 or 2 days from these levels in silver next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com.